Welcome to The Explainer. Today, we're diving deep into India's proposed new income tax bill. Now, this is a pretty big deal because it's set to replace a law that's been on the books for over 60 years. So let's walk through the major procedural shifts that could really change the game for how you file your taxes.
All right, let's be honest. If you've ever looked at your income tax return and just felt completely overwhelmed, you are definitely not alone. It's that annual headache, that feeling of frustration that has most of us running to find a professional just to get it done.
Okay, so here's our game plan. First, we'll talk about why the old system is such a tangled mess. Then, we'll get into the new bill's simple philosophy. After that, we'll put the old and new rules head-to-head, see what's actually staying the same, and finally, wrap up with the real goal behind this whole shakeup. So, first things first, why was a change even needed? Well, for the average person, filing taxes has just gotten so ridiculously complex that hiring a chartered accountant or a CA feels pretty much mandatory. And that just adds extra costs and another layer of difficulty to something that really should be a lot more straightforward. Think about this. For over 60 years, the Income Tax Act of 1961 has been the law of the land. That's a long time. Now, in a huge legislative shift, a new bill that's already been passed by the Lok Sabha is set to completely repeal and replace it. The target is 2025, and the hope is a much cleaner, simpler system for all of us. So what's the solution? What's the new big idea? Well, the government's approach isn't just to make a few edits here and there. Nope, they've written a completely new bill, and it's built around one single core idea: simplicity. And what's really clever is how the bill's whole philosophy is baked right into this acronym. Simple. It stands for a streamlined structure, an integrated and concise code, minimized litigation, which is a big one, and practical, transparent rules. The last two parts are about creating a system that can learn and adapt, leading to more efficient tax reforms down the road. The main goal? Get rid of all that vague language and make it easy enough for anyone to actually understand. And that brings us to the main event, the core of this whole thing. What is actually different for you, the taxpayer? So let's put the old regime and the new bill side by side and look at some of the biggest procedural changes. Okay, this first one is huge. Under the old rules, you had a pretty generous window, up to 6 years, to correct any mistakes in your tax deducted at source or TDS statement. The new bill, it slashes that time frame all the way down to just 2 years. That means you've got to be way more on top of your filings and corrections. And just in case you're wondering, what is TDS again? It's super simple. It's just the tax that gets taken out of your income right at the source. So, for example, your employer deducts it from your salary before it even hits your bank account and sends it to the government on your behalf. Let's put some numbers to that. Say you earn 1 lakh rupees a month. About 10% of that, or 10,000 rupees, might be deducted every single month as TDS. Over the whole year, that adds up to 1,20,000 rupees. Now, if it turns out you don't actually owe any tax, you file your return to get that entire amount back. All right, here's the second big showdown. The old tax regime is famous, or maybe infamous, for its long list of deductions, like under Section 80C, for things like provident funds and life insurance. But claiming them meant dealing with a literal mountain of documents. The new bill wants to completely streamline all of that, requiring way less paperwork and making it so much easier to file on your own. But, and this is important to know, it's not a complete teardown of the old system. The new bill is actually pretty smart about it. It's strategically keeping some of the most effective and, frankly, popular parts of that old 1961 Act. So what's staying put? Well, for you as an individual, the flexibility to get your TDS refunded isn't going anywhere, which is great news. For society as a whole, tax exemptions for charitable and religious donations will continue, which helps encourage giving. And for businesses, this one's crucial. Tax will still be calculated on your net income, after expenses, not on your gross receipts. So what's the big picture here? Why go through all the trouble of rewriting a law that's been around for 60 plus years? What's the ultimate end game driving all of these changes? When you boil it all down, it really comes to two things. On a macro level, it's all about improving India's ease of doing business score. But on a much more personal level, it's about empowering you, the individual taxpayer, to file your own taxes, to do it confidently, and to do it without needing to hire an expert. And this all leaves us with one final, really important question. As the whole process of filing taxes gets clearer, faster, and just more accessible, will it encourage more people to actually join the formal tax system and pay their share? That's the big question. and the government is clearly betting that the answer is a resounding yes.